Welcome to the Wylie Housing Report. This month, the month of May 2025, the median price in Wylie dropped to $425. This is not a big drop, and you're going to see a couple things that are affecting it. And this is compared to May of last year. The price distribution in Wylie is where you're really going to see that make sense. The vast majority of homes sold in Wylie were priced between $300 and $399 at 37.5%, so almost 40%. The next biggest category was the 500 to 749 range, which was 32.1%. So what we're probably seeing is a few more smaller homes sold in Wylie. I wouldn't be too worried about that price decrease. 5% overall, year over year, isn't that much. But month over month, year over year is what we really do need to pay attention to. Here's a shocking number though. Our active listings jumped 45.5% to 225 listings active on the market in Wylie. That is a huge increase. We always see more houses come on the market in May, June, July. Those are big months that we are seasonal. Even during COVID, we were seasonal. However, a 45% increase that's kind of ginormous. Closed sales in the month of May dropped almost 11%, 10.99%, to only 57 homes closing in May. So think about that for just 1 minute. We had 224 come on the market and we only closed out 57 of those. So we're building inventory rapidly. The days on market also jumped. The average days on market was 55. The average number of days to close those homes was 35. That's completely normal. But the total days is 90. That's 19 more days than May of last year. So if you are selling your home or going to put your home on the market in Wylie, it's going to take us potentially 3 months to sell it. That is a long time for being show ready every day. You have to have the house picked up, cleaned up. The day that your child leaves dirty clothes on the floor in their bedroom is the day you're going to get a showing. But it's a lot of work, and I don't want anybody to think that I take that for granted. Sellers are doing a lot to sell their homes right now just to be ready every single day. But months of inventory has jumped to 4.7. It was 1.8 in May of last year. The definition of months of inventory is how many months it would typically take us to sell the number of homes that are on the market. So 5 months, almost 5 months of inventory, it's going to take a hot minute to sell those houses. It's also speaking to just how rapidly inventory is growing on the market. So Wylie still has some new construction going on. Certainly not the level that you would see like in Lavon or Princeton, lots and lots of new construction, but it's absolutely contributing to that. The months of inventory, old philosophy was that at 6 months of inventory, it was a balanced market. Neither the buyer nor the seller had an advantage. If we go over 6 months of inventory, the buyer absolutely has an advantage and can negotiate more to their benefit. I don't believe in that philosophy anymore. At current rates, current attitudes, current inventory levels, it's 4 months is a buyer's market. 4 months of inventory. So we've crossed that threshold in Wylie. I want to go on to talk about just general market matters. I want to talk first about short sales and explain what that is. It has been 12 to 15 years since we've really seen a significant number of short sales. A short sell is when somebody is trying to sell their home and they currently owe more on it than they can get in the market. So they're having to sell it at a loss. But worse yet, they can't cover that loss and they're asking the bank, the mortgage company, to cover the loss for them. So not only do you have a buyer and a seller mixed into the process, but now you've added in the bank that has to approve a short sale. Short sales can be fantastic opportunities for buyers that are super patient. A short sale will take anywhere from 45, which I think you're being grossly optimistic, 45 days up to 120 days to get approved by the bank. It takes a lot of time, it takes a lot of patience, and sometimes even then, the house, it doesn't get approved for the short sale and goes on to be foreclosed on. Which leads us to the next category that I want to talk to, which is foreclosures. We really haven't seen that many foreclosures on the market for almost a decade. Houses were moving so quick, there was so much equity. The majority of short sales and foreclosures that we're seeing are brand new construction. And this is across North Dallas at this point in the suburbs. But we're still seeing a few of them in Saxe. So again, a wonderful opportunity for a buyer, not a great opportunity for the seller. It means they lost their home. From the buyer's perspective, again, there's got to be some patience. The banks are usually wanting you to buy it as is. They're usually not negotiable when it comes to repairs unless it was absolutely something that you couldn't see in advance. So you have to be super careful. Usually those homes have not been cared for toward the end of their ownership. And so that you walk into some surprises. So home warranty can come in super, super handy. All of this being said means that our homes are getting more affordable. We're seeing prices come down. We're seeing interest rates bop around quite a bit. We seem to have quite a bit of volatility in the interest rate market. At the day of this recording, conventional interest rates are under 7 just barely. Government loans are closer to like 6.5, 6.375, 6.5, and I'm talking VA and FHA. So we're seeing some better interest rates, or at least somewhat stable. I hate saying that because we had a hard pop about a week and a half ago and jumped up and over 7 for just a little bit. That was painful. But we're seeing a lot of sellers pay some or all of the buyer's closing costs. In some cases, we're seeing them buy down the rate for them. This makes affordability much more manageable. And then I also want to talk just a minute about buyer's agents commissions. Some of you may know that a year ago, August, we had a kind of a shakeup in our real estate marketplace when it came to how buyer's agents were compensated. Back in the day, listing agents completely pre-negotiated the buyer's agent's commission, and we posted it in the MLS. It was a sign of cooperation, and it was also a guarantee that the buyer's agents would get paid. In August of last year, that all changed. Buyer's agents now have to negotiate their commission with the buyer. But then the buyer's agent asks the seller to pay that commission. Since August of last year, I have had one offer come across my desk with a 2.5% commission on it. That offer was really low, ended up not working out. All the other offers, for the most part, have had a 3% commission. So if you're a seller or you're thinking about being a seller and you've heard about what's happened, need you to be prepared for a couple of things. Number one, you've got to price competitively or maybe even a little under what the competition is doing to get something going on your house quickly. Number two, you've got to be prepared potentially to pay some closing costs. And number three, you certainly have to be prepared to pay the buyer's agent because that's what's expected in this marketplace right now as of today.